Welcome to the Grant Thornton Consolidation Tool demo. This demo showcases key features of the consolidation tool. The tool uses a starting point as the trial balance of individual units or entities and produces consolidated financial statements of the group. It supports multiple levels of consolidation and preparation of financial statements at each level. The tool starts with an easy-to-use menu. You can press the Enter key to navigate to a section and Shift plus the Enter key to return back to the menu. The top sheet shows critical information like the mode, the entity, the currency, and some basic checks on the financial information. The tool can basically be used in two modes: the entity or unit level mode and consolidation mode. The entity or unit level mode is the starting point for preparing the group financial statements. This mode requires the user to input the trial balance into the template, which can be done by just uploading the trial balance file and preparing the standalone financial statements. The consolidation mode is used for consolidating the multiple tool templates and generating the consolidated financial statement. The tool in this mode automatically calculates minority and exchange translation amounts. The tool in this mode also facilitates elimination of intercompany balances. Moving on to the first step to setting up the tool for use, the chart of accounts. Chart of account mappings are a one-time effort, and only new account codes will need to be added on an ongoing basis. The next step in preparing a standalone entities template is to upload the trial balance. This is also a macro-assisted process and requires the user to browse for the trial balance file. Choose the sheets, select the columns, and press the Import button. Confirmation of the import is shown soon after, and it also shows the total of all account balances imported. This helps in identifying any trial balance issues at this stage itself. The next critical step in completing the standalone template is to fill in the information for intercompany transactions. This view captures information of intercompany transactions as captured in the books of the entity. For example, the holding company in its standalone template will fill in only its side of the intercompany transaction. If the holding company had a loan from subsidiary 1, it would fill in the transaction as shown on the screen. This information can also be filled in using account codes, where the system will automatically populate the balance sheet or P&L grouping the account code relates to. Similarly, when a holding company made sales to subsidiary 3, the transaction needs to be filled in as shown on the screen. It is important to note that at this stage, no adjustments for these transactions are being made, and these will only be considered at the time of consolidation, which we will come to later. Any adjustments to account balances can only be made using adjustment entries, and all adjustment entries are recorded in this view. The tool also shows supporting schedules for each P&L and balance sheet item. Note that the adjustments are shown in a different column. For consolidation, the tool needs to be changed to consolidation mode, and the user needs to select the underlying template files. The group structure needs to be defined to provide the percentage of holding and whether an entity is a subsidiary or a joint venture. After this, the consolidation button will get the job done. It may take 2 to 3 minutes for the tool to pick information from all the standalone templates, though while it does the workings, the status will be visible at the bottom left corner of the screen. Once the consolidation process is complete, the consolidated balance sheet, P&L, and supporting schedules are all prepared and ready. Foreign currency translations have all happened and minority interest is calculated. Once consolidated, the underlying templates and the consolidated template shall stay linked. Therefore, any changes made to the underlying templates shall be automatically updated in the consolidated template. Also, like the standalone template, adjustment entries can be recorded in the consolidation mode as well, which will appear in a separate column and not affect the individual entities columns. The next most critical step in the consolidation is the matching of intercompany transactions and balances. As we had already captured this information in the standalone templates, this only needs to be matched and adjusted upon consolidation. The intercompany elimination view shows the entire list of intercompany transactions, filled in by the standalone entities. An automated match feature is available to match all the transactions and balances between entities by putting a unique match ID to each auto-match. In case of some transactions not auto-matching, a manual match is also possible. Any differences or errors in matching are visible in red on the right and can be adjusted to a selectable balance sheet or P&L head. That concludes the demo. Thank you.